All right, everybody, let's go ahead and let's get started. Welcome to the pre-market show. Hopefully everybody had a good weekend and is ready for an even better trading. All right, if we look at the long term here on gold, you can see again we're at the very top end of this long-term channel. All right, so you can see we're trying to re-enter here, right, on this long-term channel that we've been in again since the end of December. So we're trying to make a re-entry in here. All right, it's already made one rejection off of the re-entry of this channel. All right, so that's why I would be a little bit cautious on sells until we get something very clear that we are re-entering here. All right, and that would start with the loss of 21.11. All right, down around here.
All right, we legged up because of the tariff junk. All right, we legged up because of that, came down and formed a new low. All right, we have a new low formed down here at 18.099. All right, we do have the actual low down here, but I'll leave that off for now since we're kind of above this zone. All right, so we built up a demand zone down here, right? Buyers built up their positions. They resisted the lows. All right, now see, right here, we didn't really have much of a supply zone. But again, that's where things are a little bit different during leg ups, right? When we leg up, we have to let price rediscover itself. Oftentimes, leg ups are followed by a pretty steep low. Not always, but oftentimes. All right, because again, this is the market looks at this and sees this as an inefficiency, right? So something needs to happen here because this just doesn't look right. You know, like the general market, you know, in a weird way, kind of likes this type of action where it's just back and forth, right? So when something like this happens, it makes them feel a little bit weird. All right, where even eventually, like you can look at here, even eventually it came back up to here to kind of fill a little bit of this gap, right? All right, so let's look at here yesterday. Now, Sunday open, we had a little gap. I said yesterday, I love gaps. All right, I love the gap. All right, it's where we get the best shoes and shirts you can get around. Gotta love the gap, right? So I said, you know, and obviously gaps, you don't know when they're gonna fill. You know, you don't know when they're gonna fill. It could be today, could be tomorrow, could be next week, could be 2 weeks from now, right? But obviously, we got quick work of this gap on ES and at Nasdaq yesterday. All right, now we were trading live yesterday and got beat up a little bit in the early morning chop. Again, where we did kind of have a failed breakout pattern here, right? We came up, formed a high, came down, formed a new high, but then failed the previous one. All right, and that ultimately caused the downtrend of yesterday, all right? And so it started off first with the filling of these lows, with the filling of these lows here at 19.026, failed 18.947, and that just kind of kept the train going all the way back down here to 18.733, coincidentally. All right, and we're back up here at 62.34. Now 62.34, again, this is I mean, technically we had a test over here that did fail initially and come down here. All right, but this is technically the 1, 2, you know, kind of the 4th/5th test of this level. So again, every time it comes up to here, it's like a battering ram, right? Hitting it. So it has a higher probability each time. So 62.34 to 62.82 is getting weaker and weaker by each of these retests. Okay. Now for the current moment, it is rejecting off. So what we would need now for continuation down is obviously a continuation through here, through 61.73. All right. Now what we really want to see for a plowing to the downside would obviously be a failing of 60.47, failing of 59.21. All right, the ultimate failure is 55.75. But the thing is I don't know, you know, we don't really know how low oil will actually be able to go, right? Because again, it's very politically driven, very currency driven. I say this every day about oil. It's one of the reasons why I kind of like it, but I also don't like it. Because it gets very range tradey, which is one thing that you would want. But in the other scenario, because it's so politically driven, it's kind of like the Asia session. It does a whole lot of nothing until just randomly just like blows up somewhere.
Bands on the indicator, and if you are not aware, the yellow lines always resemble the bands. All right, so I mean, we're looking
Again, spread's not too bad, 112 ticks. All right. So in order to move to the downside, we need to create a new low below 62.24 here. All right, as the previous high, where we had a failed breakdown, and then really we're gonna have to break up this zone here to get back down to the downside. And right now, the upper band on the indicator sitting right here. So this is where where we're looking at, where the majority of the volume has been for this current session. All right, so for this session, this is where the majority of volume has been. All right. And so where we needed to take it down really is, again, losing 62.34. A sell might be interesting there. Again, we could look potentially at the re-entry / resistance of 62.80 here. But the reason I like to take sells or buys after the first reclaim is, again, because just because we have resistance here does not mean that the market wants to go down. It just might mean that it needs to pull down before pushing back up. There's always that option. Sometimes oil does surprise me. All right, but again, a loss of this trend, loss of 62.82. Again, the indicator painting us a buy. I mean, this would be a confluence galore. And then obviously if it cleared 62.34, that would also be a major sign of a move to the downside. Like major. Where at least we come down to 61. And then, obviously we got these, every level's got to clear eventually, but that's why we hold runners. So let's say you're getting 5 here, sell 3 here and just hold 2 for the rest of the day. Or if you're normally getting 2 full-size contracts on oil, getting 2, sell 1, getting 20, sell 15, hold 5, whatever.